Should a first-time home buyer apply for an adjustable rate mortgage for their first home? I talk about that in this episode. Welcome everyone to this episode of the Ask Jason Gelios Show. I'm Jason Gelios, Michigan Realtor. I want to talk to you about how there's not so much a trend, but there's data showing all the way back to about 2015, according to the National Association of Realtors, that first-time home buyers are starting to trend towards obtaining an adjustable rate mortgage on their first home. And this is extremely interesting. Now, I want to share with you here that there are people who, when they hear the words adjustable rate mortgage, they freak out. They think, oh my gosh, it's going to go nuts. Or, my son or daughter is never going to do an adjustable rate mortgage. They're terrible. They'll default. They're horrible mortgages and things like that. Or we will never do an adjustable rate mortgage, right? So I kind of want to share with you some data here. But first, I'm going to share with you my opinion on adjustable rate mortgages. Now, many people don't stay in their home that long. On average, it's about 5 to 7 years, with the exception of a small group that has been in their home for decades, right? Now, adjustable rate mortgages, I think, are great options, but they're not for everybody. Just like certain foods aren't liked by certain people, okay, adjustable rate mortgages are only good for people who can benefit from it. You typically tend to get a much better interest rate on an adjustable rate mortgage. If someone looking, for example, if somebody's looking like a first-time home buyer, or any home buyer, quite honestly, and they're looking at staying in a home for, a few years, right? Maybe it's their starter home, which most of the time first-time home buyers are looking for a starter home. I have had some buyers that wanted a starter home type of property, and they said, okay, I'm going to be here forever. That's fine. That's perfect. Okay. But when you're looking at first-time home buyers and regular home buyers that are saying, okay, I'm not going to be in here that long, or maybe the interest rates will get even better in 3 years, whatever, right? Which nobody has a crystal ball, but they might be feeling that. So adjustable rate mortgage is key for that. Okay. You can get the better rate and not leave some of that on the table. And what I mean by that is, if you're a first-time home buyer and you're like, this is our starter home, we want to get this house and build up a little bit of equity. Probably in 3 to 5 years we're going to move. Well, then why do a 30-year fixed? A 30-year fixed makes you feel warm and fuzzy. A 15-year fixed makes you feel warm and fuzzy, right? Oh, it's fixed for 30 years. I feel so safe. But is it overkill? Is it a false sense of security? I don't think so, because it's still secure. Most people will do a refinance. According to the mortgage reports, they'll do a refinance every 3 to 5 years. So should we change our thinking about the adjustable rate mortgage? I think so, because it's not as bad as people think. Back in the day, people may have known somebody that did an adjustable rate mortgage and then it adjusted after the specific term, right? Could have been a 5-1 arm, could have been a 3-1 arm, just whatever the case may be. But they may have heard something bad about it, and they're like, oh, I'm never going to do that. Well, then that doesn't make sense. Okay, I'm sorry, I get that. Okay, it makes sense, but it doesn't make sense to just have that fear. Okay. Now, another stat here. I'm gonna get into some facts from the mortgage reports. By the way, not endorsing them in any way, although I was featured in some of the articles. Great source of information, though, I will tell you. They state that the typical homeowner moves in 7 years. So do you need a 30-year fixed if you're going to move in 7 years? Probably not. Plus, you could always do a refinance. You can do a refinance from a 5-year arm to another 5-year arm or whatnot. Okay. Now, we go into what exactly an adjustable rate mortgage is, because many of you will already know what an adjustable rate mortgage is. Okay, but I want to share with you briefly what it is. Okay, so the majority of today's adjustable rate mortgages, okay, for the first group of years, right? Let's say a 5-year ARM, okay? That's going to be a fixed rate that's unchanged. Doesn't go anywhere. It stays that same, okay? After, okay, and this is why, by the way, a 5-1 ARM is called a 5-1 ARM, because it's fixed for 5 years and then it will adjust every year after, okay? So after the initial group of years, let's say in our example here, 5 years, your mortgage rate actually adjusts once a year. Now, it's not going to go up to 10% and all of a sudden. No, there are certain caps to it, okay? And then after 30 years, your loan is paid. So it's not terrible. It's not, it's not gonna jump up, 5% more and your rate's 10% now, okay? The mortgage reports gave a good example here about how, again, it's, the mortgage rate changes. There's an anniversary, right? So let's say you got on December 1st, right? And then after 5 years, a year later, it would adjust on December 1st, okay? So you have that. So, that's just something. It's something to really think about, because why are we going with a 30-year fixed rate, which is a little bit higher, when we can do a 5-year ARM? And I'm by the way, I'm not a proponent. I'm not like pro, adjustable rate mortgage. I like a fixed rate too. It makes me feel good. But you got to really think about, okay, does this make sense? Because if I can get a little bit better rate, better payment, then okay, I'll be fine for that term. So just wanted to actually say that. I want to leave you on this statistic. This is from 2015, but this is showing the trend that we're seeing now, and that's according to the National Association of Realtors, and its 2015 Home Buyer and Seller Generational Trends Report. The typical age 40 home buyer expects to live in their home for a period of 10 years. Okay. The youngest group of buyers tend to sell within 5 years of purchase. They are the best candidates for the 5-year ARM. That's what this report says. So, should a first-time home buyer use an adjustable rate mortgage to obtain their first home? I say yes, if the rate is dramatically less than a 30-year fixed or a 15-year fixed. But the caveat there is, are they going to be in the home long-term or short-term? Yes, we could do a refinance. Refinances aren't that expensive in my opinion. So if the rate was better in 5 years, right, but before the adjustable rate mortgage starts to adjust, then okay, they could refinance it and get a better rate. However, you just have to really look at those two things. So is the rate on the ARM dramatically less, or is it just a little bit less? Are they going to be in the home for over 5 years? Which even then, look at what the market's doing and all that fun stuff. So always consult with a reputable lender before you actually make this decision, and know the pros and cons of going with an adjustable rate mortgage to buy either your starter home or your second home, third home. It doesn't matter. Okay. So I hope you guys found this valuable. Be sure to follow me on social media. All those links are in the description below. And you can visit my website. It's allabouttherealestate.com. I appreciate you guys watching. Thanks, guys, for watching this episode of the Ask Jason Gelios Show. Did you know that I also have a podcast? Go to where you love your podcasts, where you love to listen to those podcasts, right? Search Ask Jason Gelios Show, or you can search my name, Jason, Gelios, and be sure to subscribe. Take me on the road with you, right? You can hit audio. I add episodes all the time. Be sure to subscribe to my podcast. Thank you.